I'm Ron Zalban. I made Aliyah about 17 and a half years ago, and I'm a CPA both in the US and in Israel. And today I'm going to talk to you about US and Israeli tax reporting requirements. Okay. The first thing is, Israel taxes you on residency and not on citizenship. So you could not make Aliyah and live here, and Israel still will tax you. In general, Aliyah is considered residency, but not exactly, and we'll talk about that later. The US will tax you on citizenship. So what happens is, if you're a US citizen and you leave the borders of the United States, unlike other countries where you don't have to continue reporting to that country, US citizens and green card holders have to continue to file US tax returns even after they stop living in the US, and they have to report all their worldwide income. They will get a credit for the taxes paid abroad, so they won't get taxed double. One of the things that is very important to note, a number of years ago, Congress passed legislation that said if US citizens owed more than $50,000 of taxes, that they could have their passports revoked. Now that's been indexed to $53,000, but it's something very important to keep in mind, because if you don't stay current with your US taxes and you owe more than $53,000, the State Department will revoke your passport. Okay, so you have to continue filing US returns even if you leave the borders of the United States. In general, there's a income threshold in the 1040 instructions. Every year it changes, but for most people, they have to continue reporting because of their income goes over the threshold. Now for state, let's say you leave and you make Aliyah, you leave the States. In general, you don't have to continue filing US state returns unless you have, for something like rental income or an interest in a business, either an S Corp or a partnership. One of the things that the United States understands is if its citizens live abroad, they are going to have wages. And one of the things that they give is something called the foreign earned income exclusion. So what happens is if you have wages or self-employment income, you can exclude up to $105,900 in tax year 2019. What happens is in your tax return, you put the income in and then they allow you to have a deduction out. If you live outside of the United States and you live in Israel, your US Social Security benefits are exempt from both US and Israeli tax because of the treaty between the United States and Israel. After the 10 years, your US pensions will be taxed in Israel first, and you'll claim a credit on the US return. And same thing with capital gains. We'll get back to that when we talk about Israeli taxes. There is also something called a surtax on unearned income. If you live in the United States, you're subject to this. It's also known as Obamacare tax. And people say to me, well, I don't live in the United States, why should I have to pay it? Well, according to the legislation, it applies to all US citizens. So if you have a certain amount of unearned income and your adjusted gross income is over the thresholds, you have to pay this tax, which is 3.8% in addition to income tax. So examples of this are interest, dividends, capital gains, rental income, royalty income. And unfortunately, if you file Israeli returns, you will not get a credit on this because it's considered a Medicare tax for purposes of Israel. If you have mutual funds inside an Israeli bank account or outside the United States, there's something that you probably have not dealt with that's called a PFIC. The United States does not like that. What happens is mutual funds in the United States have to distribute their income to their shareholders and on a current basis, and foreign mutual funds don't do that. So a number of years ago, the mutual fund lobby in the United States said this isn't fair, and they passed legislation. And if you owned foreign mutual funds, which are called PFICs, the tax rate is pretty difficult, and you probably want to stay away from this. So if you decide that you want to invest in this, you should seek proper tax advice. One of the other things that you probably have not encountered is something called an F-bar. What happens is if you have accounts outside the United States at any time during the tax year, in addition to a tax return, you have to file a form called an F-bar. And that's all of your accounts combined at any time during the year. It could be at just 1 second during the year. Let's say you had 100,000 shekels that went into your account and then went out of your account. Let's say you got a mortgage and the bank put it into your account and then you paid it over to another bank. You have to file this F-bar form. You have different examples of accounts that you're going to have to include on this F-bar account are bank accounts, they are investment accounts, they are things like Israeli pensions that your employer has to put you into. If you have signature authority, let's say you're a nonprofit volunteer and you can sign on the checks of an organization, that also gets put into the mix. The penalties are pretty steep, up to about half of the account. It's something that you want to make sure that you file every year. The due date for this form is April 15th of every year, but the extended due date is October 15th and everyone gets an automatic extension. And here again is a list of the accounts that you have to report on your F-bar account. One of the things that additionally, in addition to the F-bar that you have to file, is a Form 8938. Congress puts certain thresholds in order that they could levy additional penalties on people that have not reported their foreign assets. So if they go over a certain amount that we're going to see in the next slide. So for example, if you live in the United States, that threshold is $50,000 at the end of the year, or $75,000 if you're single, and double that if it's married filing jointly. And overseas, it goes up to $400,000 or $200,000. The purpose of this form is to give more teeth to the United States to impose penalties. There are certain things that get reported on the F-bar that also get reported on the 8938. There's a lot of things that get reported on both, but there are definitely some deviations from both of them as well. It's just something to keep in the back of your head. Here's a list of some other things where and this 8938 applies. One of the things that you should know is if you live overseas, your due date is now June 15th instead of April 15th. Though if you owe any tax, the tax starts accumulating interest as of April 15th. Now, one of the interesting things that Congress legislated back in 2009 and started with tax year 2014 is something called Fatca. What happened was every country had to come into a treaty with the United States, and the banks from all of these countries have to report to the IRS the highest balance of US persons' bank accounts and other financial accounts to the IRS. There are different ways that this is done. Either, for example, in Israel, the banks report to the Israeli Tax Authority and the Israeli Tax Authority reports to the IRS. In other situations, the banks in foreign countries report directly to the IRS. It depends on what type of Fatca treaty was signed with the United States. The banks here in Israel and all around the world have to determine if the people who are opening new accounts and existing account holders are US persons, that is US citizens or green card holders, and they have to fill out a W-9 form, which gives the name and the US Social Security number of the account holder. And what will happen is information will be passed on based on that information. In Israel, there are a number of banks that once they find out that someone is a US person, if they do not sign the W-9 form, they will freeze the account and issue a check to the person if they don't give them a W-9 form, or they will freeze the account until they get a W-9 account form. What is being reported from the banks for this Fatca information? In the beginning, it was just the name, the address, the social security number known as the TIN, the account number, and the account balance. In the first year, the second year, they also started reporting income. And the third year in 2016, they started reporting on gross proceeds. So for now, information is in the mix where U.S. persons are getting reported to the United States in order that they understand that they have to file an FBAR, and it's something that is very much enforced here in Israel, and I know in other countries as well. On the flip side, what is being reported to the Israeli Tax Authority is the U.S. is reporting to Israel the income of Israelis who invest in the United States, and that information is being used by the Israeli Tax Authority to make sure that Israelis are reporting on their worldwide income. U.S. estate and gift taxes. Even though that you move out of the United States, the estate and gift taxes still apply to you. You have an $11 million exemption per spouse in lifetime and death. And when you pass away, you receive a stepped up basis in the United States, the date of death values. If there is a new administration, you can expect something to happen where this probably will change, or this 11 million, but it's very up in the air at this point. So it's $11 million. It actually gets indexed for inflation, so it's now 11,580. And whatever you don't use, your spouse can use. Let's say you only used 5 million of it, your spouse can use the 11,580,000, and they also can use another $5,580,000. Also, one of the things to keep in mind is you can give $15,000 per donee, just like when you're in the United States. If it's 2 people giving to one donee, it's $30,000, and you don't have to file a gift tax return. If it's over the $30,000 or the $15,000 for one person giving to another person, then you have to file a gift tax return, just like you were had you lived in the United States. If you have a case where an American is married to a non-American, a non-resident alien spouse, they can give their non-resident alien spouse $155,000 every year. It changes by a little bit. If you're married to an American, you can give them an unlimited amount of money for every year. Additional gift tax exemptions if you pay tuition directly to a educational institution, or you pay medical payments directly to an institution, a hospital, or a doctor. Just like in the United States, if you pay it directly and you don't give it to the recipient, it does not count for your $15,000. Okay, do we have any questions, Moshe?
You see on the chat.
Okay.
If you change your name in Israel from English name to Hebrew name, how do you let people know you are a U.S. citizen?
So the question is, if you change your name in Israel after you make Aliyah, how do you let everyone know? So when you fill out the W-9, you have to fill in your U.S. name and your social security number on that form.
Are social security payments reduced when residence is outside the U.S.?
Are social security payments reduced when you live outside the U.S.? Generally, no, but there is a provision that if you are getting a foreign pension, for example, from Israel, they can reduce your payment up to 50%. It's called WEP, and you can look that up on the Social Security website at ssa.gov.
Okay. How can Israeli income tax be calculated or estimated in a spreadsheet or any kind of rate? Is there a way?
How can Israeli income tax be calculated? If you go to the Israeli Tax Authority website, they have a calculator where they will do calculations on ordinary income. We'll come and talk about special rates of tax on income in the next segment.
Foreign earned income, is income earned outside the U.S., or can it apply to income earned in the U.S.?
Foreign earned income exclusion. Foreign earned income is income that is earned outside of the U.S. If you earn the money inside the United States, you do not qualify for the foreign earned income exclusion.
People saying they're not hearing. They're asking if you're, oh wait, no, sorry, that's all. This might have missed this. What determines where you pay tax, US or Israel?
What determines where you pay tax, US or Israel? So if you're a US citizen, you have to pay tax in the United States. The question is who gets the first right to the tax? And it depends on what type of income you have. For example, let's say you have passive income for the United States. The United States on interest and dividends will get first right to the tax. If you have capital gains, which we'll get to in a little bit from the United States, Israel generally gets the first right of tax on the sale of securities. And if you sell a property in the United States, America will get the first right of tax. If you have wages from Israel, Israel will get the first right of tax. Okay, so let's talk about Israeli taxes now. Israel, as I said, taxes residency, not citizenship. So you could be someone that makes Aliyah and leaves after a week, and you're probably not considered a resident of Israel. In general, a resident is somebody who is a resident for 30 days or more in the tax year, and a total of 425 days in the current year and the prior year and before that. But that is not a rule that is always the case. You could have someone that came to Israel, God forbid, as a tourist, gets hurt, and is in the hospital for 3 years, and there's no question they have not become a resident of Israel. It depends on intent, and it also depends on a number of other things. Again, you're in Israel more than 183 days, and it can be rebutted. Okay, so who is a resident of Israel? It's considered somebody who is center of life is Israel. So where is their permanent abode? Where is their residence? Where their family is? Where their business and their employment, where their social and cultural activities, and where their economic interests are. So if you've got somebody that's spending, let's take an easy example, 365 days a year, even if they haven't made Aliyah, most likely they're probably going to be considered a resident of Israel unless there's some kind of other kind of criteria. Maybe they were here as a student, perhaps, but if they move here permanently, more likely than not, they're considered a resident of Israel. Who has to file an Israeli tax return? Generally, most people out here in Israel do not have to file tax returns, because what happens is, unlike in the United States, where you have withholding on your W-2, what happens here is the withholding tax from your job is the first and final tax withholding. So most people here do not file returns. So who does have to file a return? Somebody that's self-employed, a corporate shareholder of 10% or more, high wage earners, that's roughly around 600,000 shekels of income from wages, somebody that has taxable foreign income, high investment income here in Israel, or if you transferred about 500,000 shekels abroad in a 12-month period, or you're a beneficiary of a trust. There are other situations in addition to this, but this is just a rule of thumb. For the first 10 years, in general, you are exempt on your foreign income. That includes interest, dividends, capital gains, rental income, royalty income. If you work here and physically sit here and you've made Aliyah and you kept your job from America or anywhere else in the world, that is not exempt. If you are an emergency room doctor and you go to work in the United States or in England, that is qualified for the 10-year foreign earned income exemption. Now, the Israeli Tax Authority for a number of years has tried to end this, actually I should say, they're trying to end the exemption from reporting, but they're not trying to end the exemption on the 10 years. That has not passed. The Knesset has rejected that request multiple times, but it could change soon. So the 10-year exemption is people who became first-time residents of Israel, or a returning veteran Israeli. And a returning veteran Israeli is someone who's been out of the country for more than 10 years. And this applies to people whose residency started after the 1st of January 2007. If you came before January 1st of 2007, you had a 5-year exemption on interest, dividends, and interest and dividends and rental income and royalty income, and capital gains was 10 years, but it was slightly different. If you have a capital gain, even after the 10 years, it's going to be prorated. So let's say, for example, I owned the asset for 10 years before I became a resident of Israel, and I sold that asset 11 years after I became a resident of Israel. Only 1/21 of that gain is going to be taxable if I sold it in year 11 after my Aliyah. So your capital gains are going to be prorated on a linear basis. So for after 10 years, let's say you have a pension or annuity, those are going to be subject to tax. There's a general rule of 35% of the foreign source pensions are going to be exempt, and 65% will be subject to regular tax rates. And that's most likely in the case of somebody that inherits. But usually the case is if you've got a 401k or a 403b or an IRA that's from work abroad, the Israeli tax authority in the code has a section saying you're not going to pay any more tax than had you stayed in your country of residence. So what that means is we calculate your US tax, and whatever that US tax would be, we give that tax to Israel. And because of the treaty, Israel has the first right to tax it, and America gives you a full credit. So let's say your tax on your 401k was $1,000. You're going to pay that $1,000 to the Israeli tax authority, to Israel, and you'll get a credit for that on your US tax return. So you're not going to be any better or worse off. You're going to be tax neutral. Now, one of the things because of the treaty that's really very interesting is if you have a government pension for the United States, a federal, a state, a local municipal pension, that pension is going to be exempt in Israel even after the 10 years because of the treaty between the two countries. So let's say I've got somebody that gets a State Department pension. It'll still be subject to tax in the United States, but it will be exempt in Israel. As I said in the beginning, Social Security, it's going to be exempt both in the United States and in Israel during the 10 years and after the 10 years. And that's because of the tax treaty between the United States. If you live in the United States now, it's taxable at either 0, 50, or 85%. And it's a very nice bonus for folks that live here, and they don't have to pay tax on their Social Security. Israeli Bituach Leumi is going to be potentially taxable in the United States, but because of the welfare rule, probably it won't be taxable. And it's exempt here in Israel. If you make Aliyah at a later point in life, it depends if you're going to get Israeli Bituach Leumi or not. Here are the special rates on income that's passive and also income that comes from Israel. If you've got dividends, generally that's going to be at 25%. That's for both from the United States and in Israel. If you get dividends from an Israeli corporation, it's actually going to be 30% if you own more than 10% of the stock. If you have interest income, it's going to be no greater than 25%. One thing I want to make sure you understand and you note is United States municipal interest is exempt in the United States, but after the 10 years, it is not exempt in Israel. Capital gains, if you have capital gains on the sale of securities, the tax rate is 25%. If you're a substantial owner in an Israeli corporation, it's 30%, and there could be another 3% on income. On income, that actually is a mistake on the bottom of the slide. The 650,000 is actually reporting on wages that are earned in Israel. The tax rates on earned income here in Israel start at 10%, and they can go as high as 47%. And actually, there's an extra 3% surcharge on an income after 650,000 shekels. There's also potentially Bituach Leumi, Israeli Social Security, on some types of passive income, but not passive income at special rates. When Bituach Leumi is owned on passive income from abroad, it's usually at 12%. Foreign rental income after the 10 years. There are two different options that the tax could be at. It's either at regular tax rates, where we tax the net income at regular rates up to 50%, and you get a credit for both the US federal and the state tax. And there's Israeli Social Security on this, or there is an alternative of 15% on gross rents. So let's say the gross rents were $10,000, then the tax will be $1,500, but you don't get any credit for US income tax nor for state taxes. We do give a deduction for depreciation. Israeli residential rental income, that you do not get a 10-year exemption, and there's a number of different options where that tax could be taxed. If you have under roughly about 5,100 shekels a month on residential rental, not commercial, that rental income is potentially exempt in Israel. If you have over that amount, what happens is they'll start clawing away at the exemption, and the remainder, part of it will be taxed at regular rates, and part of it will be exempt. There's another option where you can just pay 10% tax on the gross. So let's say you had $10,000 of income, you'll pay $1,000 of tax. And you won't have to file an Israeli tax return if you choose the 10% option, as opposed to the regular tax option where you have to file a proper tax return. Now, one of the interesting things is for each property, you can calculate the 15% option or the regular tax option, and you can flip that method on each property per year. Now, if you own that property through an LLC or an S Corp, there are certain restrictions, and they're just a little bit more involved than we can cover in this webinar. Okay. Israeli Bituach Leumi or Social Security. If you work overseas and you're sitting here, let's say you've got a W-2 from your former employer from the States, and you continue to work here, you will be liable for Israeli Bituach Leumi as well as US Social Security. Also on passive income, but most of the time that's not the case. So it's generally not something you have to worry about. If you're working here, you're exempt from Israeli Social Security contributions when you reach full retirement age. Deductions on an Israeli tax return. Things that can be deducted on an Israeli return are accounting fees, investment expenses, and legal fees that deal with tax issues. Now, generally, Israel doesn't allow very many deductions on the tax return. For example, what you had in the States with mortgage interest, that does not exist. One of the nicest things that Israel gives is actually not a deduction, but a tax credit. So if you give donations to a Section 46 charity, you get a 35% tax credit. You give 100 shekels to charity, you get 35 shekels off your tax bill here in Israel. One of the things you have to make sure is you keep your receipt and attach it to your Israeli tax return. The original must be attached to the return in order to get the credit. And again, it has to be to a Section 46 organization, which is like a 501c3. Unlike in the United States, here in Israel, you can be a nonprofit, but not have Section 46 tax exempt status. Now, dues are not deductible, unlike in the United States. And donations to United States tax charities are deductible as allowed by the treaty. So you must have US source income that's taxable on your Israeli tax return, and then you can use the U.S. Charity donation on your Israeli return. And Israel does not give, it does allow a credit for federal and state taxes, but not for city taxes. Israel does not have an estate tax. There has been plans, there were plans in the past to institute that, but it's never gained any traction. So at this point, it's not really something you have to worry about. If you have a foreign trust starting in 2014 or 2006, those trusts are taxable. If you're in your 10 years, generally that they're not going to be taxable, but the tax rules are very complex and exceed the scope of this discussion, but it's something that you have to keep in the back of your head. If you're a beneficiary or settler of foreign trusts, you should get proper tax advice. Here is how to get in touch with me. Our office is in both Yerushalayim and Tel Aviv, and I split my time. I'm in Yerushalayim 4 days a week and Tel Aviv 1 day a week. Moshe, do we have more questions?
Yes, somebody's asking about annuity funds. She's saying that she receives a monthly disbursement from my late husband's annuity fund for the last year. Will I have to pay taxes on this?
Annuity fund, that will continue to be taxable in America, and after the 10 years, it's potentially taxable in Israel as well.
Okay, and Benny is asking, do we need to keep paying Social Security contribution when living in Israel? If so, how much?
Okay, so the question is, do we have to contribute to U.S. Social Security after we become a resident of Israel? Generally, if you are a salaried employee, you do not pay into the United States here in Israel. You do not pay into the U.S. Social Security system. If you are self-employed here in Israel, you have to pay both American Social Security as well as Israeli Social Security. There is a tax treaty between the two countries, but there is not a Social Security tax treaty, or better known as a totalization agreement between the United States and Israel.
A U.S. citizen residing in Israel with investments in the U.S. There is no U.S. foreign tax credit. Does Israel tax this income as well?
So somebody has investment income from the United States, is it considered taxable here in Israel? After the 10 years, absolutely is considered taxable for Israel. America will have first right to tax the interest and the dividends. On the capital gains, Israel will get the first right to tax the interest and dividends, and America will have to give a credit.
Can you talk about W-2 versus 1099 taxation, income earned from U.S. company?
Can you talk about W-2 versus 1099 income earned for a U.S. company? I assume the situation you're talking about is you make Aliyah, you become a resident of Israel, and you're going to continue. I'm going to assume that you're working here 365 days a year, and you're going to get a W-2 from an American company. If that's the case, you're going to be liable for United States. I'm sorry, let's start that over. You'll be liable for Israeli income tax, as well as Israeli Social Security, as well as U.S. income tax, but you'll get a credit for the Israeli tax you paid. And you're also going to pay U.S. Social Security, but only half of that because your employer pays half of it and you pay half of it. So it's 7.65 for you and 7.65% for your employer. Now, let's say you are 1099. The difference on that is same thing. What I'm again assuming that you're performing all the work here in Israel. That in that case, you're going to be liable for Israeli income tax, Israeli Social Security. You're also going to be liable for Israeli income tax. I'm sorry, U.S. income tax with a credit for Israeli taxes paid. But you're going to, in the United States, you're going to be liable for the full Social Security amount, not the 7.65, but the 15.3%.
Okay. Does a 10-year exemption apply if you were a resident that does not make Aliyah?
Does the 10-year exemption apply if you're a resident but you not make Aliyah? Yes, absolutely. If you're considered a resident of Israel, let's say somebody came here, never made Aliyah for whatever reason, but sat here and was here 365 days a year for 10 years, no question, you are liable for Israeli tax in year 11.
Is he saying income earned outside of Israel prior to Aliyah is taxable by Israel? If so, if I move in July, Israel can tax my U.S. income January 1st to the date of Aliyah?
So the question is, let's say I make Aliyah in July. Can Israel tax my earnings from January through June? No, they cannot. You were not a resident of Israel till July, let's say July 1st. The income that you earned in the States between January 1st and June 30th is not subject to Israeli tax.
Does a 10-year exemption apply to income from self-employment when the work is done for non-Israeli clients and money is deposited in a U.S. bank account?
So the question is, if you have income earned from non-Israeli clients and it's deposited in a U.S. account, it doesn't matter where the money is deposited. It doesn't matter where the clients are. If you sit here, the exemption does not apply. You must physically work outside of the United States. I'm sorry, outside of Israel. So let's say you go to the United States. Again, my example is an emergency room doctor. They definitely earned all their money outside of Israel. It'll be taxable in the United States, but will be exempt in Israel. Most of the time, you do not have somebody that sits here 365 days a year. And most of the time, you do not have somebody that goes to the States and earns all their income. It's a mix of earned between both places, and that tax has to be split between the two countries. And it's a little bit beyond the scope of this talk, but you should understand it makes things a little bit more complicated, and you should get proper tax advice.
How does Israel tax trust distributions in the U.S.?
How does Israel tax trust distributions in the United States? I'm assuming that you're talking about after the 10 years, it'll be subject to tax at either 25% or 30%. The rules are quite complicated and beyond the scope of this. You should receive proper tax advice about that.
What is the tax rate on 401k, assuming on a tax treaty taxes paid to Israel?
What is the tax rate on a 401k distribution? So I assume that you're talking about after the 10 years. What's going to happen is we would calculate your U.S. tax on the 401k distribution. Let's say it's $1,000. And instead of giving the $1,000 to the United States because of the treaty and the Israeli internal law, that tax is paid to the Israeli tax authority. And on your U.S. tax return, you will claim a credit of the $1,000 paid to Israel through the treaty.
If you are over age 70 and a half, do you have to do an RMD on a 401k from an employer, or is that only if you are not a U.S. citizen?
If you're over 70 and a half, do you have to do an RMD? Yes, you must do an RMD. Actually, the law changed recently to 72, but it depends on when you were born. But yes, you must do an RMD on a 401k. That doesn't matter if you're a U.S. citizen that lives in Israel or in the States, or you're a non-resident that happened to work, a non-American that happened to work in America for a number of years. You have to take out of that 401k.
Are there special or extra taxes on high wage earners that cause the individual to file a return that would not have been captured by a company's tax payment on their behalf?
Okay, so the question is for salaried wage earners, if they earn more than 600, roughly about 650,000 shekels a year, would they have to pay additional tax? The answer to that is no. Generally, what happens is the employer withholds the extra 3% surcharge. You will have to file a return, but generally, if I have one wage and it's earned here in Israel, generally, I will not have to make up any other tax. That tax is going to be withheld at source because the Israeli tax authority wants its tax up front and does not want people to pay it on the back end.
Are the Aliyah benefits taxable, such as the monthly stipend for Olim?
Are Aliyah tax benefits taxable? I assume you're talking about in the United States, because in Israel, they're definitely not taxable. And in the United States, I would take the position that they are not taxable as well, because they're welfare payments.
Are Roth IRA distributions taxed in Israel, or are there treaty benefits?
Are Roth distributions taxable in Israel? Within the first 10 years, they're definitely exempt. After the 10 years, I had a question mark on my slides because that one is something that is a little bit gray. And the question is, are they taxable in Israel? Most likely, yes. And what rate is a question beyond the scope of this discussion.
Okay, maybe last question.
Here's the last question.
When working for a U.S. company, does the Israeli tax ever end up more than the U.S. taxes owed?
Okay, from working for a U.S. company, I assume that the question is if you're working and you're sitting here, are the Israeli taxes usually more than the Israeli taxes? Yes, generally the Israeli taxes are steeper, and they go from 10% to 47%, where the highest rate in the United States is 37%. So yes, they can be steeper. Thank you for listening. I appreciate your time and wish you a pleasant Aliyah and a great day.